Right, good morning, Wednesday 9th of March. I've just had a look at gold, silver and oil. If you haven't had a look at that video, please check my list of videos. Released that a short while ago. I'm going to try to make sense of the Forex markets, and I will be honest with you, they haven't made a lot of sense to me for a while, a few days at least. So I'm going to try to find some opportunities, and I'm going to start with the Euro-Yen. Euro-Yen, actually, I probably should start with the weekly chart. It bounced surprisingly, actually, off the 50% fib. So as you can see, we had a low down in 2020 of 114.41, a high of 134.12 last year, and since then we have retraced 50% of that move down to 124.27. The exact low was 124.38. So we got to within 11 pips of that 50% Fibonacci level. Now, I didn't actually think that we would bounce off there. I would have been looking for some trend lines, moving averages, something else to tell me that this was going to be a strong support level. Well, I was wrong, and in the end we did bounce, and we now do have the makings of quite a bullish candle on the weekly chart. As you can see, the long lower wick, we opened around the 200-week moving average, traded down, now we've recovered, and we've now got a real nice looking blue body to that weekly candle as we recover nicely back up to the 38.2% fib on the longer term chart, on the weekly chart. So we'll see if that acts as a resistance. And this brings me on now to the trade idea, because we really are running into resistance around 126.60 up to, I would say, 127.00. Even on the daily chart, you can see that when we take the swing high from February down to the swing low that we saw this week in March, we have a 23.6% fib of 126.45, which ties in pretty nicely with that longer term fib that I just showed you on the weekly chart. So around the mid 126.5 area, we do have quite strong resistance from the daily chart and the weekly chart. Now, taking this trend line, which goes back to, let's see, that's August of 2021. So quite a long-term trend line. We've also got resistance around 126.80. So it's all throwing into this melting pot of resistance around 126.50, 127.00. We've even got the 500-day moving average just above at 127.05. So we'll see if that 50 pip range holds this bounce. And when you consider that we are in a short-term bear trend, then that might well be the case. Let me just show you a bit more of this daily chart just to get a good perspective. We spent such a long time in this really sideways consolidation that the break, I think, should go further to the downside, but it's not unusual for financial markets, especially Forex markets, to retest the break point, and then we will more than likely see some sellers jumping in there and then pushing the market down again. So let's see if that works. Okay, now sticking with the euro versus the US dollar has been in a bear market for a significant period of time, since last summer, well, actually since the beginning of 2021, really. The market's absolutely plunged, and it's got hammered recently on this war, the euro being seen as an area which will suffer significantly, of course, bearing in mind that war is actually happening in that area. So the euro plummeted, and let me just show you the weekly chart, actually. On the weekly chart, you can see why we made a low. Now, I told my subscribers about this nice 5-year trend down here at one, bang on, look at it, in the low 108 area. We hit that, kissed it, and bounced off immediately. So that was the big reason why the euro has found a low. Now, not quite as positive candle as we've got on the euro versus the yen, but a good bounce, a long lower wick, showing some serious buying coming in at that level on the weekly chart. I'm going to come back to that weekly chart in just a second, but first I'm going to show you the Fibonacci levels that I put on my daily chart to try and figure out how far we can go on this bounce. Getting oversold on the daily chart, only just getting oversold. No particularly strong candles in the short term on the euro, so I'm not looking for a very significant bounce. But if I were to take the high from February and put some more Fibonacci levels on here, we can get a little bit of a roadmap for the short term. Let's zoom in on that. You'll see already that we've got resistance around 109.60, 109.70, and we had a high yesterday of 109.58. So that's the reason I think that the euro is stalling at that level and coming off quite aggressively. So we're going to have to watch what happens from around the 109.60, 70 area down to the 108 sort of 20, 108.00 area. We may just range sideways in that area for a while. I can't be sure, but those are the two levels that you need to look out for. Now, if we do continue to the downside, let me get the, actually, I'm going to need to show you the monthly chart, maybe even the quarterly chart. Yep, let's do the quarterly chart. Now, you can see here that this trend line goes all the way back to 1980. This is huge, absolutely huge. So we've actually got, let me see, that's like a 42-year, is it a 42-year trend line going on there? Now that level comes in at, where is it? Around in the low 106 area. Let's call it 106.50, 106.00. So if the market was to start breaking below 108.00, who knows, we could fall another 150 to 200 pips, but that would be an enormous support area with that mega trend line. You don't often see trend lines going back that far. Definitely something you need to pay attention to. In the short term, of course, it is entirely possible that that 5-year trend line will be the one that holds it, maybe enough. After such a move to the downside, the bulls will step in. And if we start breaking above sort of 109.80, 109.90, we can run pretty much up to the sort of 110, I'm going to call it 110.50, 110.70 area with strong resistance around the 111.5 area. We'll re-examine that if we get anywhere near it. But I just wanted to give you a kind of an outlook for where we can go on the bounce now that the euro has hit big support levels against the against the US dollar. I'm going to finish up with cable. Cable, I've really struggled in recent weeks. We weren't really going anywhere. On the daily chart, I'll show you in a minute, it was kind of up one day, down the next. I can't do anything with that. You've really got to be a very active scalper, and I'm not. I do want to point out to you how we're testing the 38.2% Fibonacci level on the weekly chart, which is around 131.5. And we've also got the 200-week moving average just a little bit lower at 131.20. So we're testing that. We've been down as far as 130.80, but we're bouncing back. So it's a question of, can we stabilize above the 131.00 area and then build something of a rebound as we have seen with the euro against the US dollar? Maybe we can see that with the pound against the US dollar. And I will put some Fibonacci levels on here as well. As you can see, it very much, hang on. When I bunch this up, it's really, we have been in a bear trend, but I found this quite confusing. This just back and forth, up and down. I couldn't really make sense of that. Now we have headed lower. So when I go back to my fib levels on just the short-term move, we could, we're struggling at this 131.5 fib, as you can see, but we could get up as far as 132.00, 132.20. I think that would be a realistic target if we do manage to bounce, and there would be something in the region of 100 pip profit on a long if that does work. Okay, those are the three currencies that I'm going to look at today. I've looked at maybe 15 currencies today, and they're all really quite confusing. You know, the markets are becoming increasingly volatile for obvious reasons. I think that that is something that will continue because I think liquidity will dry up a little bit. I would imagine the hedge funds and the banks are taking their foot off the gas a little bit, being very cautious. We've seen some insane moves, especially in the energy, in the commodity markets, the energy markets. Nickel, I believe, going up something in the region of, was it 250% in a few days? You know, that's got to cause some people some serious problems, and it's going to make others think twice about having large positions on when really there's going to be not enough liquidity to get out of it. So I think, as I say, increased volatility is here to stay, at least while this war situation continues, and we are likely to see maybe volumes a little bit lighter than usual because of that. So just be careful. Don't get yourself into a position where you can't get out of where you can't activate a stop and you're looking at some serious losses. You know, there are some crazy moves. Right, I'm going to move on to stock markets a little bit later on today. So please do like, share and subscribe, and make sure you get the update when I release the next video.